Hi guys, it's your boy Focus Concept here. I want to share with you one of the strategies that I use. A strategy that is highly profitable. It's given me profitable trades before. It's in my trading arsenal, and if you're going to implement exactly what I'm going to teach here, trust me, it's going to pay you in the long run. So all you have to do is follow step by step what I'm going to show you here. Now, the strategy is simple, really. You don't have to rack your brains, complicating things. It's very simple. Now, remember, this is one of the strategies in my trading arsenal. And if you use it correctly, you'll see how it's going to be paying you very handsomely. So the first thing you want to do is go to the weekly time frame, and you want to have that sense of direction. You want to see price reacting on weekly key levels. And the type of reaction that you'll be looking for, it's the rejection reactions. So you want to see a key level being rejected by price. That rejection tells you that the price is trending the opposite way. If it's not trading the opposite way, it tells you that the price is actually continuing with the existing trend. For example, as you can see, this is a weekly time frame here. It's a weekly time frame on Euro JPY. That is basically Euro against Japanese yen. So the first key level that you'll identify here, or rather that you can see here, it's this open close key level. So the first thing you want to do is highlight it. That's the first key level that we have. The second key level that we have, it's this A level that is clean. Some might argue that that is the wisest key level for you to use, because if you look above it, you have the low of this candle, of this weekly candle. So they can say that this weekly low is the inducement that will be fed to this A level. A level, why? Because when you go to a line chart, it will appear as an A. You see, that is an A, and A in this case, it's going to be used as a support. It's going to be used as a support. Why? Because price broke above it, and now it swapped purpose, or rather it switched its role from playing a resistance to now playing a support. Now that we've identified these two key levels, now first thing you want to do is, after identifying this, I told you on a weekly time frame we want to see a rejection on a key level, on a weekly key level, and we already have a rejection on this weekly key level, on this open close key level. Now you want to do is to go to a time frame lower, 1 day, and what you want to see on a daily time frame is a break of structure or a breakout within the weekly rejection level. So we have a breakout here. Why? Because if you see this candle, this black candle here, let me just zoom a little closer. This candle here, it took out the low of this previous candle, and this bullish candle, this engulfing candle, it took out the high of the previous candle that took out the low of the previous candle. I hope you're there with me. So I can just highlight it, for you to see clearly. This is our high that's been taken out, and this is our low. So we have a breakout. As you can see, the low was readed, the high was broken. So can we find that breakout on a line chart? Let's see. Okay, it's not showing on a line chart, but we'll just go with it. Now that we've found our breakout on a candlestick chart, what you want to do next is go to 4 time frame for zone mapping. And as you can see, on a 4 time frame, we've actually got that breakout. See, this high was broken. Yeah, this high was broken. So what you want to do now, or rather next, is identify the key levels for entry. Remember, now we're zone mapping. We're mapping the zones that we will enter with on a lower time frame. Now, let me just clear this, because it's a setup that our price failed. It's my previous setup that price failed to pull into. So let me just delete it for the purpose of clarity. Another way of being profitable is just make sure that your chart is very clean. If your chart is clean, as you can see here, are you seeing any indicator on my chart? There's no indicator. You can see there's no indicator here. There's no indicator. So the more your chart is cleaner, the more profitable you will be, because it increases clarity in the charts. And when clarity increases, you know what that means. So what do we do next? Now we're looking for the zone that okay, now that we've identified our key levels, I'm just going to go ahead and delete this one, and I'm going to focus on this key level, and I'll tell you why. So I'm looking for, okay, I think I'm going to work with 2 hour or 3 hour. No, I'm just going to work with okay, I guess I'm going to work with 3 hour time frame then. Let me extend this to this level. Yeah. So when we go to the line chart, we have our A level here. That is our A level that was tested several times before failing. It was tested here, got respected 1 time, 2 time, 3 time, 4 time, eventually it got broken. Now, why have I selected this key level? Because as you can see, it's clearly a strong level that was previously tested before it eventually failed. Now, what price tends to do after it break above or below a key level that was previously respected, price tends to pull to that level to test it again, to mitigate all the orders that were previous, that might have been previously left unmitigated. So price will come to fully mitigate that key level. Now, another reason why I've selected this level here, so as you can see, it's within this imbalance. This imbalance, see, there's an imbalance here that price will want to fill it, or might be tempted to fill it, because price moves from zones to zone, filling imbalance and mitigating zones or orders. Sorry. Now let me just go to a 2-hour time frame. I want to show you something. This is 2-hour time frame. I want to show you something. So now that we're on a 2-hour time frame, I think I'm just gonna adjust this to this there. Yeah. Okay. Now I want you to observe something here. When we go to this breakout, so rather this break of structure to the upside, this low is a strong low. Why? Because it took out the previous low and it broke the previous high. Let me show you on a line chart. You see, it took out the previous low, and the move that originated from this low broke out the previous high. So this low is a strong high. That is our swing low. It's a low, or rather, that is our swing low, and this level is our swing high. Because as you can see, this high took this is a swing high. This high took out the previous high, and it proceeded to take out a low. So this is a swing high and this is a swing low. So I want us to focus on these two levels. On these two levels. Now remember, on a weekly we are bullish because price did what? Price reacted from a weekly key level with a rejection type of reaction to the upside. Now, after we got this breakout, or rather breakout structure, price proceeded to print a new high. This is a new high. Now, this pullback, the first pullback that you get after a breakout, the first valid pullback that you get after a breakout, that is your inducement level. How do you validate a valid pullback? A valid pullback, if it's pulling to the downside, it must break the low of the previous candles. Now, look at this candle that printed our low. It took out the low of this candle, of this bullish candle, and also closed below the low of this black candle. Look at this low. Price closed below it. So this is our valid pullback. Now some might say, okay, now that we've gotten that pullback, let's enter here or here. Others may even say, let's enter at this V level. Let's enter this V level. But what happens is price will do something like this. It will raid all the orders that are here, raid their stop loss, because this is an inducement level. This is inducement level. Then it will feed all the stop outs here to this key level here, our key level here, and it continue with what? Buying. And that's exactly what's going to happen next week when the market opens on this pair. You'll observe it. Now that I've shown you up to that, now let's mark out. Okay, you can go to 15 minutes to 30 minutes to 45 minutes for further zone refinement if you want to risk small and win big. Yeah, that is. But for me, I'm just going to work with a 2-hour time frame because I've already identified where I'll enter. Now, where do we place our entry? Our entry plays at this A level that failed. It's now going to act as our support. This A level is sitting at 183 and 1.197. 183.197. Then stop loss, I'm just going to use 20 pips or 250 pips. No, 25 pips. That is 250 points. Yeah, that's going to be my stop loss. And I'm going to target this high. That high. I'm going to target that high. Because when you come to weekly, where's the weekly time frame here? Yeah, when you come to weekly, you can see that those people that trade the CRT, they'll tell you, this candle's low has been raided. The next area where price is going to pull into, it's this high. This high. For some reason, it's not. Let me change the color to black. Why don't I change it to white? And I can say, price will now pull to take out this high because it's already taken the low of this candle. And also, look at this candle here. They tell you the same thing on this candle. This low has been raided. We now aim for the high. And that's the same criteria that I'm going to use, draw on liquidity. Price pulling to higher time frame key level to mitigate the higher time frame key levels. Yeah. So that is how, that is one of the strategies that I use. And you can use this setup for future reference to just see how price will react to this key level when it pulls into it, and you see how it will turn out. Yeah, so I've I haven't complicated things. I've tried to make it as I haven't used big words or big terminologies. I've used words that you can easily understand I've broken it bit by bit for you to understand. So just do the same on other pairs. You can try to backtest this on your, on your other pairs in your watch list. See how the market reacts every time it creates or gives you this setup. Yeah, until then, I think I'm gonna stop it there. Yeah, and yeah, till next time, guys. Till next time. It's Focus Concept signing out.